Welcome to today's episode of Canadian Mortgage Weekly. I'm really happy to be with all of you this morning for episode 48 today. So this morning it is just going to be me. Joe is out of the office for the week, but I still have a lot of really great information for all of you. So again, if anyone is unfamiliar with the format of Canadian Mortgage Weekly. Essentially, we just want to create, a video source for mortgage news so that, all of you consumers can stay informed on what's happening with the market, where we're seeing things going. And we've had some awesome topics up to this point. This is our first November topic, and episode 48 means we're rounding out to that year of 52 videos. I'm sure we're getting close to that mark. So thank you everybody who has been watching all of these videos. Even if you've missed some, definitely go back and look through some of our videos, because we do have a lot of really awesome topics to keep you, informed as new first-time home buyers, or again, just any homeowner, or somebody who's looking to get into the market. Well, let's just hop into some of the things that I'm gonna cover off today. So again, the rates are still on the rise. It's definitely been one of the most common conversations that I've been having with a lot of our clients, because I believe everybody has been seeing news articles about the rate hikes that are coming up. So the fixed rate is still on that rise, where we're seeing rates closer to where we were at the start of 2020 pre-pandemic. We're seeing rates well over 2%, whereas the fixed rate was at that very low 2% range. So we're seeing that as vaccinations are coming out, and as the economy is starting to restabilize, we're seeing that rate growth. So again, there was an article that I was reading from CIBC, which brought up an interesting point about home ownership, and how prospective rate rises are going to affect homeowners who bought during the pandemic, because they're getting rates that are much lower than an average rate. So if we start to see the market restabilizing, we're seeing those rates rising and returning to pre-pandemic levels. It'll be interesting to see how that affects homeowners, with that increase in rate and increase in borrowing costs, because I know that a lot of it really spawned on a rush of new home buyers to get in while rates were as low as we've been seeing them. So it's interesting to note, and keep an eye on where that's going to be headed. Again, if we're seeing these new rates are starting to rise, and for clients that got in on a very low pandemic sort of emergency rate, how they'll be affected if the rates begin to rise at the time of maturity, when they want to refinance, or sign and renew their mortgage. So really what all of this pressure on rates has been doing is it really has been making pre-approvals more relevant than even during the pandemic, when we were seeing rates continuously low. It really does stress the importance, and really highlights the benefits of getting that pre-approval rate hold for 120 days. That we're seeing getting a pre-approval will also give you a 120-day rate hold guarantee. So again, as we're seeing these rates rise, and they're expected, even the variable rate, they were saying it was going to be towards the end of 2022. That schedule has now been advanced, and it's looking like that's going to be closer to the April mark of 2022. So a pre-approval is going to be especially coming into the end of this year, before we see rates rise anymore, getting that rate hold certificate is going to be, incredibly beneficial, because we're seeing rates continue to rise. And, having that rate hold guarantee enables you to lock in that lower rate for the 120-day window. So even if it's, at the end of that 120 days, again, if you're getting it now, it's gonna, still be in effect and still take hold until early spring next year. So pre-approvals, if you're looking to get pre-approved or even just want to know, what you qualify for exactly and what rate we can secure for you with that rate hold, definitely reach out to our office. We'd be happy to chat with you to get you processed in your pre-approval, because really, as we're seeing the rates continuing to rise, pre-approvals have become, definitely more valuable, because we get to see, that 120-day rate hold, if we see rates rise anymore. And again, the growing gap between a variable and fixed rate is just continuing to spur conversation. I know that pre fixed rates rising, even pre-pandemic levels, there was always a discussion or a debate of is a variable rate or a fixed rate more, is it more beneficial for me? And I think as we're seeing this gap continue to rise and continue to grow, we're seeing a lot more people jump on the variable rate. Even as the Bank of Canada has stated, it was quite an optimistic announcement for their October Bank of Canada rate announcement for the variable rate. It was quite optimistic, saying that the economy is recovering well and we're getting back to some of those pre-pandemic levels, from vaccine rates, and just a general restabilizing. So it's an interesting, conversation, even looking into the future, where they have advanced their schedule that variable rates are scheduled to rise a bit earlier than we thought they were, at the start of this year. But again, it's there's still a lot of factors regarding the variable rate of, how much is it going to grow each time. We've seen that the rate hasn't changed for, I think, every rate announcement of this year so far. But as it's rising, by what factor is it going to rise? And, if it does remain at low level increment increases, we could still see the variable rate and variable rate mortgage holders, still come up on top, as it's, not scheduled to rise. We're seeing the fixed rates already rising. So the variable rate has still kind of, remained a low spot. And definitely, we chatted about it in another video, where given the low rates, especially the variable low rate, the amount of money that each payment is going directly towards the actual mortgage loan and not to interest, is definitely making it a very positive choice, because your first few payments, so much of your payment is going directly towards the principal loan balance, compared to a high fixed rate in the 2.7 range. We're seeing that a lot of your payment is going directly towards that principal. So again, rates are definitely the big topic of conversation. And there was another article that I just wanted to chat about quickly before I wrap up today's shorter episode of Canadian Mortgage Weekly. And it was saying that the GTA market was still on the rise. It reached a record high in October, and it was up 19.3% year over year. So again, this is just another positive article regarding the home appreciation price for anybody, again, who has decided, maybe I'm going to wait on the market. I'm going to hold out a little bit because the market's going to crash. We're still seeing those increases in appreciation, year over year being 19%. So again, another positive indicator to get into the market. And again, to get pre-approved today, we can definitely chat with you for any questions you have about the pre-approval process and get you pre-approved with that rate hold for 120 days. Again, we're seeing those fixed rates climbing. So if you can get your rate locked in and have that guarantee for 120 days, it could be very beneficial for your process moving forward. And that's about all that I have for Canadian Mortgage Weekly today for this week's episode 48. Again, just to introduce myself to anyone who hasn't seen any of our previous episodes. So my name is Sam Thompson. I'm a local mortgage agent in the Barrie-Simcoe area, but serving all of Ontario. And usually we're joined with Joe Bladdock, who is a mortgage broker, again in the Barrie-Simcoe area, living up in Aurelia. Yeah, definitely. So thank you for coming out to today's video, for sitting with me to cover off some mortgage news. And we will catch you for the next video of Canadian Mortgage Weekly, where we'll cover off a new and exciting topic, and looking at where the market's going and looking at some of those news articles. So thanks so much for joining me today, and I hope you have a great rest of the week.